Hello everyone and welcome to today's video. Today we are going to take a look at a very interesting topic, and that is how does Robinhood actually make money. I recently did a video on how do zero commission brokerages make money. So these brokerages, they don't charge you anything for transactions, right? No commissions, nothing. So how do they actually make money? That's a very interesting thing. And we looked at a general concept as to how all these zero commission brokerages make money. Today we'll deep dive into one of the most popular zero commission brokerages, the first ones to actually enter the market and offer zero commission trades across the board, even on equities and options and all other instruments. So we'll see how these people are making money, and it's not going to be an estimate, it's not going to be a judgmental call. What I did was I scanned through almost 100 plus pages of their financial statements that they are filing with the SEC every quarter, and from that I extracted the figures. So let's take a deep dive, look at exactly how Robinhood makes money, and this information is coming directly from the financial statements that they are publishing. So let's proceed. As I said, this is what we'll cover here. We'll look at all Robinhood's financial statements to look at their sources of income, and also then you can correlate this with my other video. If you've not watched that, I'll leave a link in the description. Watch my general video where I talked about in general how zero commission brokerages make money. So you can correlate with that, and then you can decide for yourselves whether these commission free trades are actually free. So today I'm not going to explain any of the terms like what is payment for order flow and other things. We'll just look at what all components form the income of Robinhood. But if you want to really understand what those components mean and whether they are good or bad for you, then you can look at my other video. A quick disclaimer before we proceed further, that any information that I'm sharing with you in this video is only for entertainment purposes. It is not any kind of trading or investment advice. If you plan to trade or invest your money, make sure you're getting in touch with a certified financial advisor and you understand the risks of trading and investing before you proceed. So one call out that I want to make is that I'm sharing my trades for free on the community tab of my YouTube channel. So if you want to see the trades that I am actually taking, you can actually go to the community tab of my channel, and a better way is that you subscribe to my channel and you enable the notifications. So what this will do is, as soon as I post a trade on the community tab, you will get notified. So then you can go to the community tab and you can take a look at the trade, and that forms a very good learning experience. Also, you can see whether those trades are working out or not, because I keep a track of the running profit or loss that is being made on the trades. And this is not just one or two trades. This particular if you look at the community tab right now, I think 40 plus trades have been posted there. And every month I am not taking day trades, these are all swing trades. So you can just enable the notifications so that you get notified, and hopefully you will find it useful.
In order to get my trades for free, you can just go to my channel, Serene Trading Strategy, and once you're on the channel homepage, then you can go to the community tab over here, and here you can see that all trades are listed. So till now I have posted 41 trades, and some of these will show in the open status, which means this is an active trade and I have still not closed this particular trade, whereas some trades you will see will be closed. So these are older trades which have been, these positions have been closed. And so we have multiple open and closed trades mentioned here on various symbols that I have taken. And also for the closed trades, what was the return, whether it was a profitable trade or a losing trade, what was the annualized return, how many days were there to expiry when I took the trade, and actually the trade was open for how many days. All those statistics are mentioned here. We also keep a track of the running loss or profit. So right now you can see this is a positive number. So there is a $4,052 profit till now. So if you want to follow my trades, you can follow this process, and hopefully you will find this helpful.
So first of all, let's look at the main heads under which Robinhood generates the revenue. So you can look at this financial statement. This is the income statement from Robinhood, and you can see here that the first component of revenues is what they call transaction based revenues, and that forms the chunk of their revenue. If you look at the total amount, it's $267 million in revenues out of the total 365, which they are making in this particular quarter, and that is coming from transaction based revenues. So transaction based revenues, we are going to break it down and go into more details. But transaction based revenues, this head has the highest amount of revenue being generated for Robinhood. The second one is the net interest revenues. So net interest revenues are $63 million. So if you look at the overall figure, it's about 1/6, I would say. So 1/6 is around 16%. So about 16% of the revenues are coming from the second head, which is net interest revenues. About 35 million, which is close to 8%, is what they are making from other revenues. And we'll again break down the net interest revenues and other revenues also into more details to see what components do these two different buckets have. But what I want to call out is 16% is roughly coming from net interest revenues, 8% from other revenues. That's 24%. So about 75% of the revenues, close to that, are being made based on the transaction based revenues. So the important thing for us to understand will be to see what are these transaction based revenues and what is the composition of these transaction based revenues which generates the maximum revenues for Robinhood. So transaction based revenues, if you want to understand further, Robinhood has given us a breakup that transaction based revenues, they are further breaking it down by different instruments. Robinhood, if you've been using their platform, you'll notice that they allow you to buy shares. That means equities, buy and sell equities. Along with that, you can also trade in options, and you also can trade in cryptocurrencies on this particular platform. So if you really think about it, uh, they have multiple instruments available on their platform. Now, what are transaction based revenues is not called out here, but it is there in the description in some of the explanations that are given. So I'll just read it out, and then I'll explain what this paragraph means. Majority of our revenue is transaction based, in that we received consideration in exchange for routing our users' equity, option, and cryptocurrency trade orders to market makers for execution. With respect to equities and options, such fees are known as payment for order flow. With respect to cryptocurrency trading, we receive transaction rebates. So this is something which is called payment for order flow. If you look at my other video, which was about how these zero commission brokers make money, you will see that I have explained in detail what is payment for order flow, taking an example of two retail investors A and B trying to buy and sell shares. So I would suggest, if you don't understand payment for order flow, just go to that video and you look at all the explanation on what is payment for order flow. But what I'll explain here is that payment for order flow is essentially a technique where there are multiple market makers, and these market makers want to get as much business as possible. That means they want to process as many transactions as possible, because they make money on the spread between the bid and ask prices. So somebody is trying to buy and sell shares, then they always get a bid ask price given to them. Bid and ask are not always the same, they are almost never the same. At least 1 cent will be the difference for liquid cases, or it may be more than 1 cent in case of illiquid cases. So what happens here is, this spread is the profit which the market maker is making. So markets maker profit can be maximized based on the volume of transactions that they process. So these market makers, they incentivize brokers like Robinhood, saying that you give us maximum transactions to process. So whatever transactions are done on your platform, you forward them to us to settle them, to basically match those transactions. And in return, what we will do, whatever money we are making on the spread, we'll give you a kickback in the form of a portion of that spread, we'll give it back to you. So this is the main way using which Robinhood makes money. And this is a major component, as we discussed in the previous slide, that 25%, 75%, sorry, of the revenue that Robinhood generates is actually coming out of these transaction based revenue, which is primarily payment for order flow. Now, payment for order flow is a term which is used in the equities and the options market, but as Robinhood also gets into cryptocurrency trading, so whatever trades they are doing in cryptocurrency trading, there are multiple exchanges which will be able to settle these trades, right? So Robinhood can decide to route it to exchange 1 or 2 or 3. So from exchanges also, they get a kickback. So exchanges are basically telling Robinhood that for people who directly don't come to our exchange, but they initiate a transaction on your platform, you can forward us that transaction. So whatever money we make based on the bid ask spread, a portion of it we will give it back to you, and that is called a transaction rebate. So whether it is a rebate or whether it is called payment for order flow, this is a kickback being given by different market makers to Robinhood to facilitate the netting of the transactions, means matching and the buyers and the sellers. So this is a major component of Robinhood's revenue, and this is true for actually most of the transaction based people. I mean, most of the brokerages where zero commissions are being offered, because somehow these brokerages have to make money. So one of the important ways they make money is using these kickbacks or payment for order flow mechanisms, which are in case of Robinhood being clubbed as transaction based revenues. Second component is net interest revenues. So again, this is one way or the other in which Robinhood is either lending shares or they are lending money to the respective clients, and in turn they basically charge them some interest. If you want to understand details of each of these terms, I would again suggest go back to my earlier video, because in that video, how do zero commission brokerages make money, I have covered each of the terms and explained each of the terms in detail there with examples. I don't want to spend the same time doing here. So here we'll just look at the breakup. Net interest revenues, if you see, they constitute margin interest, securities lending, interest on investments and corporate cash, interest on segregated cash and cash equivalents, cash sweep, interest expenses related to credit facilities. So all these terms I have covered in the other video, so you can take a look at that. Essentially, interest based things, that means that, let's say somebody has only $10,000 in their trading account, then Robinhood will say you can go and you can trade or buy shares worth $20,000. Because you're using $10,000 of our money, we will lend you that money, but we will charge you interest on that, and that is called margin interest. So in the same way, somebody who wants to short stocks, they can borrow shares from Robinhood and go short stocks which nobody owns, right? So shorting means you're selling stocks before even you own them, so you need to borrow them from somewhere. So all these different kinds of services are offered by Robinhood, which are kind of services to the end user. But Robinhood, because they are giving you this facility, they charge interest for that, and all these interest related sources of income, they are clubbed into the net interest revenues category. So again, how Robinhood makes money is, again, one of the bigger chunks. About 16% of the revenues are coming from the net interest revenues. You can go to my other video. I'm saying this again and again because if these terms are not clear to you, it will not make much sense. So you first watch the other video where all these terms have been explained, and then you can actually come back and you can watch this video to see which of the terms are actually applicable to Robinhood. So final component is other revenues, and other revenues, you can see, is very, very small. So for those of you who have been using their platform, you may have felt that the Robinhood Gold, which is kind of a additional add-on service which Robinhood offers, is one of the major money makers, and that is not the case, because you can see that other revenues here are primarily two ways. One is the account transfer charges, and again, this point I have covered in my other video. The second way they do is by offering the Robinhood Gold service. So Robinhood Gold and account transfer, both, if you take them together, that constitutes only 8% of the overall revenues. So this should give you some idea as to what is the major way by which zero commission brokers like Robinhood make their money. The primary money that they make is from the kickbacks that they receive from the market makers, and many times there is a kind of they don't have a consensus, but payment for order flow has actually been banned in a lot of countries. It's banned in Europe, it's banned in a couple of other countries as well. So the reason is because payment for order flow kind of defeats the purpose of the duties that have to be fulfilled by a broker. When you choose a broker, the objective of having a broker is to give you the best possible price for executing your trades. But when the commission that you make or the money that you make is actually based on the bid ask spread itself, then the broker has no incentive to give you the best rates, because the worse rates that you get, that means wider the bid ask spread is there, the more money the market maker will make, and a higher commission is what brokers like Robinhood would make. So this is something which is debatable. I am not suggesting anything here, but primarily these zero commission brokers, they make a lot of money from payment for order flow and through the rebates that they get for passing on the transactions done on their platform from the market makers. So you have to understand this concept that when we execute a trade on Robinhood or any other trading platform, they just capture the trade. They are not matching the trade between two people who are wanting to buy and sell those shares or options. These trades are forwarded to market makers, which provide liquidity, and the actual netting of a buyer versus a seller happens at the market maker end, and market makers make money using spreads, and a portion of those spreads are actually sent back to Robinhood. So we covered in detail how Robinhood makes money through the various channels, and also I have tried to, I mean, this information is totally authentic because you can yourself go and download the latest financial statement that Robinhood has published. It's a public company, so the good thing with publicly listed companies is they have to publish their financial statements. So people like you and me, we are not in the dark. We can actually download their statements and we can see what all components are there for each of the revenue heads that Robinhood is claiming that generates money for them. So that is exactly what I did. I went right to their financial statements and I extracted this information from there. So hopefully this was useful. If you want me to do a similar analysis for any of the other brokers, you can let me know. Tell me in the comments if you know that the broker that you are using, how do they actually make money? Because there are some brokers who do not offer free option trades, but almost every broker today offers free equity trades. So have you gone and actually checked that your broker is giving you free commission equity trades? That means you can buy and sell shares without paying any commissions. But have you seen how much money are they still making off those trades? So you may feel your broker is kind of taking a loss and they may be making money somewhere else, but that is not the case. They are making money on every single transaction that you do with them, irrespective of whether they are charging you a commission or not. So hopefully this was useful information. As usual, if you have any queries or comments or suggestions, please feel free to leave them in the comment section and I will respond to you. If you like this video, please subscribe to the channel and like the video and share it with your family and friends. And I'll catch you guys in the next video. Thank you so much for your time.